All right, hey all, it's the date is 4/4/23. Took me a minute because I had my screen set up differently. Anyway, I just wanted to give you an update on the PCRIs. It's been a little bit since I've done that. I apologize if the sound's off. I'm using my AirPods today, and I got some air purifiers running in the background, so I don't know how well that's going to do or not, but hopefully you can put all that aside and just follow the chart here. So what I've got is basically today I added these annotations, and I'll talk about that in a minute. But essentially, you can see the pattern ever since this bear market started. We had an initial sort of, I guess, drop in December with capitulation, very small sell considering what we ended up doing. But so that capitulation is kind of funny. But anyway, so we sort of did a double capitulation here, went into this purple box down to this lower bound, what I would call is the oversold extreme fear or extreme euphoria, oversold on the indicator, overbought. And so when I talk about euphoria, that's because we're usually down here, and you can see the indicators. The PC put call ratio is down. This extreme momentum to the down here, which means upside. You get the idea. So anyway, that was March squeeze. We rounded off of this extreme area, back up to capitulation, higher low. You know, the next squeeze, I guess, where we again came down here into euphoria. So that's sort of the idea is you know, this oscillator, this roller coaster. You know, we sell when we get extended into euphoria, and we buy when things get towards capitulation. And just to scroll back again, like I always like to do, you can see COVID. We went above, back tested, and stayed above, and came down, and we didn't get back. You know, the bottom was several. Let's see, March 12th, and the bottom was, you know, so a couple of weeks after we sort of got max capitulation, we bottomed. So it takes time, and that's what I always say. I like to see capitulation and a flush into a V bottom. We haven't gotten that yet. But anyway, so I added these because I thought what I started to notice was basically, you know, I just watch this throughout the day, like many of you might, and I just look for patterns and see where we're at. You can see right now we went into capitulation, and I always said we start setting lower highs. That means usually that the move has lost steam and momentum. And you can see what happened is this flattened out at the lows. We got lower highs, and that sort of fueled our rally as we got this crossover here. Everything sort of minted like euphoria and bullish momentum. But now you could say this is a double bottom, maybe a higher low, divergent low. We're rounding up here, and we got the red lines again, which mark our sell signal zones, right? And so we're crossing into a sell signal zone without going all the way down into euphoria, without going down to this extreme reading here. And so what I said was, you know, this looks basically we've got the purple, and then we tend to do something here. And then I noticed, okay, the same thing sort of happened here. We had this little zone. It's not perfect, but very similar where we squeeze, and just like we squeezed in February, and then we reversed lower, and then we sort of hit capitulation, and we're sort of at the same level basically. You can see, I don't have to explain it in too much detail. Everything looks very similar here, right? So right off the bat, and even this move, you know, it's tricky because you could argue maybe there's a Fibonacci level for this June high here versus these May chop zones, and maybe that's similar. But I think what we're seeing here is as this market starts to turn from the bear market into a bull market, hopefully, or sets up the ultimate bull trap, you know, and I don't know. But the pattern is starting to shift to where we're getting, instead of lower lows, we're starting to get higher lows, right? That doesn't mean the selling is over. It'd be nice to double bottom on this, set a divergent, you know, double bottom, and then you know, double bottom, as I like to say, and then off we go. So you know, that's a possibility. So just when I talk bearishness, it doesn't mean that we're going to crash, although that's still possible. But you know, there's some liquidity to pick up here until about 39.90. This is SPX. There's a ton of stuff around here, but we had that double bottom that maybe sorted that out and got enough price trading to make the algos happy. I don't know, but anyway, so we have this this purple zone into capitulation into the yellow box. And so the yellow box is new, but we also had this sort of wedge pattern building, very similar. And you can see when we topped in June into that final leg, we had a very, you know, it's basically the similar pattern. And what I also noticed is we kind of had like double capitulation into like this purple box. And we sort of had that here, double capitulation into the purple box, and then one more capitulation in the yellow. And I don't know like why there would be a rhyme or reason to this. I honestly, you know, I could give you some theories, and I'm sure knowing me, you would have some pretty good guesses on what those are. But the pattern is pretty clear and pretty transparent to me. So what I'm watching here is do we break out in like a real breakout, right? You'd want to set it like a higher high, even if it's a local high compared to this March 23rd. But if we set like a lower high in capitulation and come back down, that's just another squeeze. We'll probably break out of this. So that's what I'm watching. You can also see we had some fake outs like in October. So if we fake out and chop higher, that's a possibility too. But if this crosses like it did here in June, and again, if this begins to cross, these are going to cross the red at the same time, and we're going to be off to the races, I think. The thing is, if you look in the context, like this move from this March high to this May low, similar in structure to our move here, which would imply that our down move, maybe it's a 3780 retest or it's a 3700. It looks like this move was about the same. I mean, I could see a double bottom here at 3850 to be honest, and then real trouble. So anyway, what I'm saying is that because this move is so much smaller, unless it's like a failed breakout, right? We have a liquidity fill, and then we fail and spill over, which is a possibility. If you're just going off the dynamics of the move, I think this ends up being much smaller than bears would like. But anyway, I would still like to get better deals. I would still like to short up here if it's going to fail, and I'd still like to buy wherever we need to buy. And as always, we'll watch the indicators to guide us. So bears are watching for a crossover here and for this breakout to persist. Bulls are waiting for this chop, similar to what we saw here and here. And historically, kind of similar here, which ended up setting up more selling. So I think a bigger sell will come. I just don't know if it's coming from where we're at now or a little bit higher. But we'll just continue to play it by ear. I hope that helps. Thanks.